Thank you for watching the CEO Barbecue. My name is Antonio, and today I'm going to Côte d'Ivoire to look for gold. Joining me on the barbecue today are two gentlemen, Edouard Gosselin and Paul Sergent, respectively the CEO and COO of Kobo Resources. Before we get into it, though, I would like to warn you that we have not received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Kobo is listed as KRI, or spelled as KRI, on the TSX Ventures Exchange, where over the last 3 months, an average of about 25,000 shares have traded daily. The stock's 52-week high is 53 cents and its 52-week low is 21.5 cents. With a market cap of 29.5 million Canadian dollars and 104 million shares outstanding, today this is a 28.5 cent stock with a 50 and a 200-day moving averages, both at 31 cents. There are 20 million warrants outstanding, about halfway split between 40 and 55-cent warrants, as well as 7 million options and agent units combined, with exercise prices between 20 and 35 cents, bringing the number of fully diluted shares to almost 131 million, meaning an increase of about 26% in shares outstanding can be expected if all dilutive securities get exercised, which would then result in about a 20% ownership dilution if, and that's always a big if, of course, but if those actually get exercised. These numbers might be a little bit different by now, by the way, because about 1.5 million of the insider held options were exercised recently, as well as almost all of the broker warrants from the previous financing have now been exercised, together adding about $400,000 to the treasury. Management and insiders here own about 40% of the shares outstanding. 10% is owned by Lusu Global Mining and 13% is owned by institutions, leaving an estimated 37% in the hands of the public, which might also explain the low liquidity here and hopefully something we can touch upon later on. Looking at the financials, the effective date on the last officially filed interim financial statement is December 31st, and the company had recorded close to $4.5 million in current assets, most of which at the time about $3.5 million was recorded as term deposits, whereas the cash and cash equivalents themselves sat at about $500,000, with some tax receivables and prepaid expenses on top of that as well. On the other side of the December balance sheet, I see no long-term debt, but I do see about $1 million on the current liability side, more specifically $940,000 worth of account payables. Moving on to the expenses for the 9 months that ended on December 31st, Kobo recorded about $4.2 million in operating expenses, which included about $60,000 in depreciations and about $100,000 in share-based compensation, leaving us with, call it $3.9 million in total out-of-pocket operating expenses for those 9 months, where about 78% of that total spend went into exploration expenses, and so 22% went into what I would generalize as G&A. More specifically, that puts Kobo at about an average of 96,000 Canadian dollars monthly G&A. 60% of that G&A went toward management, consulting, and professional fees combined, whereas investor relations expenses sat at about 27%, and the rest were mostly stuff like office and travel expenses. As always, though, please understand that these numbers represent just 9 months as opposed to a full year. And also, I'm not infallible. I often make mistakes in my reading and interpretation of numbers. So, to be on the safe side, please use setterplus.ca yourself and make sure you're getting the full picture. For Kobo Resources, that full picture is fully focused on Côte d'Ivoire, which I'm being told I'm not supposed to call Ivory Coast anymore. So, I'll stick with brushing up on my French. And within Côte d'Ivoire, Kobo has two projects. That will be the Kossou project, which is their flagship. It's almost exactly in the middle of the country, not too far away from the country's political capital, which is an interesting story in and of itself. But this is the more advanced of the two projects, with a recently completed 10,000-meter drill program on it, as well as a 20 to 30,000-meter drill program planned for Q2 of 2025, with an expected 2 diamond rigs and 1 RC rig doing all that work. The other project they have is called the Kotobi Gold Project. It's located in East Central Cote d'Ivoire, but this is earlier stage. It is generally early stage, and there is currently some regional exploration going on, but no drilling, as far as I understand it, not yet. And hopefully more about that in the conversation, or as the conversation progresses. However, for that conversation to finally begin, I'll have to shut up. And gentlemen, I'll let you do the talking. But first of all, thank you for sitting down with me today.
Thank you very much for having us, Antonio. It's a great opportunity.
The pleasure is all mine, of course. But this is your first time on the CEO barbecue, and it's the CEO and the COO barbecue. So I'll have to balance that part. But Edward, let's start with you. Maybe who are you, and why do you think you're the right man for the job?
Well, I initiated the project 12 or 13 years ago. I'm an attorney by profession. I've been so for 40 years, practice in business for 20, and was in business myself for the last 20 years.
Hmm.
Uh, I've been involved in different types of companies, industrial manufacturing, as well as IT and other stuff, chemical productions, and so on. So this project initially started out as an attorney-client relationship where I was advising investors looking to get involved in an alluvial play in Côte d'Ivoire. And so I structured the deal, and the company oversees in negotiations with the local notaries and so on. And after a year or so, didn't like what was happening, went over there, shut it down, and met the Minister of Mines. And at that time, that was in the fall of 2013. And the minister told me, he says, stick around, we're revamping the mining code. So he says, once that's done, you can apply for licenses. So they did revamp the code in March of 14 with a new version. And that's when I also met Paul for the first time, 11 years ago now. And we looked at the opportunity together, and with our chairman, our current chairman, he's the one that introduced us one to the other. And we decided to apply for licenses. And so, being bilingual, French and English, with a legal background, and Côte d'Ivoire being colonized and influenced by France, being from the province of Quebec, pretty much the same thing. So the legal mumbo jumbo is pretty much the same thing for me. So it's like swimming in my backyard.
Hmm.
So that's why I feel quite comfortable in operating in Côte d'Ivoire, because of my experience here in the province of Quebec, and on the legal side and business side as well. So we teamed up together, and we applied for small alluvial licenses. We were the first guys to be awarded these types of licenses under the new code way back in the fall of 2015. We went over there in 2016 in January and started. We were allowed to exploit immediately under the license, but we decided not to do that because we felt that part of that section of the code was not well structured, and it was a bit the cart pulling the cattle, and it should have been rearranged another way. So we decided to do some exploration. And what we did is we pulled together a small team of local geologists and technicians, started a pitting program, dug about 164 pits, 2 meters deep, After that program, the results came out. Only 9 did not have gold. So we found fine gold, nuggety gold. And while these guys were doing that pitting program, Paul suggested that we get back up in the pickup truck and start driving around because where we are today, what Kossou is today is exactly the same area that we started with way back in 2016, the alluvial play. So we're driving around on the road, and there's a rock face that's open to your eyesight because the road is built in the flank of the mountain. So we stopped at the suggestion of Paul, and we sampled 18 meters across and got 4.6 grams per ton. So then we sat down with the government and said, look, the allocation of the area needs to change because we're not in an alluvial play or semi-industrial situation. We're more in a hard rock potential exploitation. So it took us about 6 or 7 months to get that done. We applied for the license, a full research license in the fall of 2016. And that license was awarded to us in November of 2019. There had been 4 successive ministers of mine during those 3 years, so you can imagine that not much was moving. Uh, and the Kotobi license had been awarded in April of the same year in 2019, and then Kossou in the fall. Then obviously COVID came around the corner in early 2020, so we stopped working and then kicked back in if I recall well, in August of 2020, we did a mag survey at the Kossou project, and things started to unfold as of then quite a bit.
It's funny you should compare, although lightly, Quebec to Cote d'Ivoire, because a buddy of mine actually calls Cote d'Ivoire the Quebec of Africa. And obviously, there's more countries that have been influenced and colonized by the French, but it is Cote d'Ivoire that reminds me of it. Although I am biased because I also have capital invested in the country. Paul, you're the COO of Kobo Resources. I don't typically see juniors having COOs. What do you do? What is your what's your job? What do you do for the company?
Well, I guess I'm the geological brains behind the company at the onset. So, Ted and I work together very, very closely. So we've just kind of split up, those roles and those those jobs along those lines. So I try to manage most of the geological content of the company and the infrastructure, that kind of stuff within Côte d'Ivoire. So, my background, I'm a geologist. I've been in the mining industry for over 40 years. I've worked in 95 plus countries throughout my career, including a lot of work in Africa. Um, and I've worked from early stage grassroots exploration all the way through to working at mine sites. So I've got a wide breadth of experience, a wide breadth of different deposit types. But I've spent most of my time in the gold side of things. So precious metals is primarily where I focus my efforts over the course of my career. So yeah, I run things geologically. Again, that's why when Ted asked me to come over with him in early January of 2016 to look at this alluvial play, I mean, it was, as Ted rightly has described it, it was a mess from a technical perspective. And he had asked me if I could make sense of what they'd mined, and I couldn't because there was just, there were piles of dirt mined from here, from over there, from all over the place, and there were no real records for it. But they had, I think there was 10 or 12, those 5 gallon paint, plastic paint canisters full of concentrate. And we took one of those, we put it up on a shaker table, and there was a ton of gold in it. So I knew something was up. Um, and again, with my experience, when I saw the lay of the land, I saw that we were right next door to a soon to be operating mine, and the ground really was unstaked. That's what really got me intrigued with the whole situation. And as Ted's already described, the rest of it was, persistent work from us geologically, persistent work, primarily with Ted dealing with the government to get the concession area switched over from the small miners permit to the big research permits. And then once we got those, yeah, we launched in the exploration program. So, very standard stuff, prospecting, mapping, early stage geochemistry, which led us to sort of our initial, main target. And we just kept progressing as you would do on a fairly typical exploration program. But again, the unique thing is that we're less than 5 kilometers as the crow flies from an operating mine. And that's a real advantage, we believe, for the company, in terms of other juniors working in Africa, where you might be a couple 100 kilometers away from infrastructure. You can literally drive on paved roads right to our property.
Mhm.
So it's a really unique situation, and we hope to make the best of it for our shareholders.
We'll get to talking about the assets that you have and exactly what they are, specifically Kossou. But Paul, have you worked in similar geologies before, similar rocks, essentially?
Yeah, I mean the rocks are the same. I've worked in Archean greenstone belts, Proterozoic greenstone belts in North America. Again, I've done a lot of work in Eastern Africa, and I've looked at a lot of things in Western Africa as well. So very familiar with the rock types. These are there's more weathering alteration, not alteration, sorry, weathering and saprolitic cover here in Africa than in Canada. But I
Mhm.
spent the first 10 years of my life looking at greenstone belts in Canada. So structurally the same, rock types are the same, style of mineralization is very, very similar. So there's really nothing there that is new to me from that perspective. So very, very comfortable in the environment and again, just having worked all over the world. I'm just used to adapting quickly and understanding the geology and understanding, the key elements that go into an exploration program to make it successful.
Do you or any of the board members or executives personally own a royalty on any of the projects?
No,
Okay. Are there any royalties on the projects?
no.
Okay.
No.
Not at all.
No,
Okay.
well, the only royalties, potential royalties we awarded was through the recent earn-in agreements that you mentioned at the outset. So, but the ones on the Kossou and Kotobi licenses, we own 100%. There are no royalties.
Right. And hopefully we get to hear more about that earning agreement that I mentioned later on as well. Insider ownership here is noted as, again, as I said, 40%. Is that how's that split? I mean, about evenly split between the two of you, or who owns what?
I'm the largest one, and Paul is number three, if you wish, in overall shareholdings. And the rest is held like several board members and initial insiders, if you wish, when we started the company. It was private from 2016 all the way to March of 2023 when we completed an RTO. Uh, so during that 8-year period, we had raised approximately $4.5 million through high net worth individuals and ourselves. Um, we had 55 shareholders when we went public. Um, and one of the questions when you talked about the float the float, which is about 37%, I would say that the real float is approximately 7 or 8% because the other chunk is held by these high net worth individuals uh, who know that don't necessarily need to sell immediately. They know what we're doing. They know the business model. They understand what we're doing, and they're just sitting tight on the stock, knowing that there's going to be a payday down the road. So that's why there's not much liquidity in the market on our stock because it is tightly held among obviously the insiders and management, Luso Global Mining that you mentioned, and the two institutions. So, and when we did the RTO, we raised another 4.7, give or take. So, having raised at that time about $9.3 million, 3.5 million of that came from 23 geologists and or mine engineers. So that shows you the quality of the project that we're pushing for.
I hope we can talk about building a share registry as you go forward, because the liquidity is, as I mentioned, average over the last 3 months being 25,000 shares, 40 cents a share. That's not a lot of money. And so building a position is just not not necessarily easy, exiting a position potentially even harder. So hopefully we'll get to that part here in a minute. But did you got? Yeah, I assume you guys got founder shares when you started. What's the average price that you've paid for the shares that you own right now?
It goes from anywhere between the 2 cents, the 5 cents, the 10 cents, and the 15 cents and 20 cents as we went along with the different financings. Because remember, when we started this thing, this was an alluvial play initially for the first year or so. And so we didn't need much cash, and the shares weren't that expensive. On the other side, we were not paying ourselves. We took no salary. We were funding the company. We were paying ourselves for the airline tickets and so on. So uh, we got skin in the game through that by taking care of the company that way.
Mhm.
So yeah.
No half a penny shares though that you own, or a tenth of a penny.
Initially, yes. I mean, we got warrants, we got options that we exercised as we went along. Nothing below 2 cents. So that's what we did. And then we did financings at 15 cents, 20 cents, and 30 cents. So all of these financings that I just mentioned were done in the private mode all the way till 21 or so, 2022. So we increased the value of the shares as we went along, as we made discoveries, and we expanded the portfolio.
Mm. How does that work for you then from now on out? Because I assume it's a large part of both of your portfolios. Again, I don't know your personal situation, but owning as much of the companies is probably still a large part of your portfolio. So how does that work from the perspective of buying shares in the open market? Have you bought any shares in the last 12 months, and do you plan being on
Well,
the bid?
it's hard for us to be on the bid in the sense that there are blackout periods.
Sure.
Obviously, we're 2 months out of 3 months. We're in a blackout period because of the rules of the TSXV. So, and we got to be careful because with the drilling program, if we possess knowledge that information is material that we're about to release, we can't buy into the market, and then we have to wait a couple of days. And due to the fact that we've been drilling successfully over the last year or so, and our results come out from the lab on average between 5 to 7 days. So we're constantly in possession of material information, and it's tough for us to buy. So the way we do buy is through the exercise of our options. And just recently, in December and January, we exercised those options. Some of them for some players were at 15 cents, but those were the early options that were awarded way back in 2017. And the ones at 20 cents that were exercised in January of this year had been awarded around late 17, early 18 in that area. So that five-year period was coming due. So that's how we get to play into the market right now, is through exercising our options.
But we have purchased just on the market too back in last fall when the stock
Yeah,
was getting a bit
yeah, in
beat up.
September.
We did step in, and like I put in $20,000 more into the company through, or not into the company, but buying stock as well. So we do, on occasion when we're able to do, we do try to step up to support the stock of the company.
That's exactly where I was going with this, or where I typically go with this question is asking, like, are you going to be there? I mean, if something happens, there's a dry period, I don't know, market doesn't work, are you going to be there supporting the stock price? Do you have the financial capability as management? Do you have the desire to do that? That's essentially where I was coming from with that question. But let's do talk about the share registry building strategy here, because Edward, you say that 6 or 7%, 7, 8%, let's call it 10% of the shares are essentially the float. Is that something you want to change? Is that something you'll be looking to? What's the pro?
Definitely,
Yeah.
definitely, because um, when we did the RTO, we were fortunate to make a great deal for our shareholders in the sense that we only gave up 1.4% of our company.
Mm-hmm.
So the ones who did take a haircut were the people that were in the shell. And because a lot of times shells are overvalued for whatever they have, whether it's the number of shareholders or even the money that they have in the account.
Mm-hmm.
So we were very stiff on that, and we got a good deal for our shareholders. But on the flip side, I mean, yes, I mean, there's lack of liquidity, but going forward, we intend to to increase the liquidity in the market on the stock. But we're kind of at a different animal, I would say, when you look at our shareholder base and the opportunity that we have. So I don't compare ourselves as your typical junior per se.
What do you mean by that?
Well, if you look at the location of the main asset, Kossou, uh, if you were to have an asset way up in the northern part of the country, you might be stranded in terms of access to water, access to power, road access, etc. It's not our case. I mean, we drive up every morning from our house that's based in Yamoussoukro, and it takes us 30 minutes to get to the project. It's paved all the way to the project. There's a power dam next door. There's water accessible. There's labor pool accessible. And on top of it, there's an operating mine 9 kilometers away by road. So we don't have to spend 250, $300 million in order to be successful. So when you look at Kobo, you need to recognize, the location. Often enough in real estate, we talk about location, 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 for the value of your real estate. Well, I say that rule applies right here for Kobo and the Kossou project in terms of a next door neighbor. And we were fortunate enough to bring on board the geologist who supervised or oversaw the drilling of the herein mine site, 160,000 meters over 4 years, bringing it all the way up to the DFS. Now he's our exploration manager. And we're also fortunate enough to bring in the structural geologist that worked there for 7 years, Dr. Ghislain Tourigny. So I'm saying that we're a different animal. On top of that, the other element that I would add is the partnership with Luso Global Mining. Luso Global Mining is a subsidiary of Mota and Gill. Mota and Gill is a large EPC company, one of the top 15 in Europe, based in Portugal. They have 50,000 employees in 30 countries. But the most important thing about this relationship is the fact that Mota and Gill is a mine contractor in more than 10 mines in Africa and has been in Africa for plus 70 years. They are the mine contractor of 4 gold mines in Côte d'Ivoire: Lafigué, Sagala, Agbau, and Bonikro. So they bring a ton of expertise, experience, knowledge, financial backing to a junior like us who would like to, if that's happens that way, that we want to take a project, whether it's Kossou or another one, all the way down to construction and operation. So we do have that muscle behind us. So we're a different animal because of those factors.
There's loads to touch upon there and talk about. I would typically move on here to talk about the history of the asset and how you got your hands on it, but you kind of already touched upon it. As far as I understand it, the assets have not been in a public company before you touched them. They were just artisanals kind of working on them, but nothing really in the Canadian markets.
No, because when the government came upon with their new code or updated code, they had 3 types of permits: your alluvial, semi-industrial, and the large research permits. And they would not allow for overlapping of permits. So they had these zones that were dedicated to either type of permit. And the area where Kossou was on the east side of the Bandama, that was essentially allocated to semi-industrial. So when we got there, we recognized that there was a different situation, and that's how we were able to convince the government to change the allocation. They agreed, and we got the assets, but no one had explored that area before. And even BRGM, who had done most of the early stage exploration way back on the Yaouré side, when it was either the Compagnie Minière Africaine, the CMA, and subsequently Clough Gold and so on, they had stopped just about a couple of 100 meters from where our license start. So had they gone beyond to the east, we wouldn't be talking about Kossou today.
Hmm, interesting.
Yeah,
And
that's what's quite unique about it is that it really is truly a brand new discovery. As we say, within 5 kilometers as the crow flies of a mine. It's really head frame style exploration we're doing, but it was untouched,
hmm,
which is what I found remarkable with all the years of my experience. It's a really unique situation from that perspective.
what is it though? I mean, what's the geological model that you're working with here? What's feeding the system?
It's your typical orogenic style, gold deposit in Archean Proterozoic terrain. So it's where volcanics, sediments along the contact we think is an important contact for us. Structurally controlled. We've got a series of very well-developed northerly trending shear zones, and those are cross-cut by a later generation, although perhaps contemporaneous, but looks like a little bit later generation of high-grade quartz veins that really focus the gold mineralization into the system. So it's nothing, it's nothing quote unquote new from that perspective. It's very typical of what you see in West Africa. It's a very clean system. There's no basically it's a gold system. We don't really have much silver. There's no copper. There's no deleterious elements as well. So it's a very simple system from that perspective. But very typical for what you'll see throughout a lot of West Africa and for that matter the northeast part of South America as well, where there's a lot of discoveries being made as we speak.
Have you say it's a clean system? Have you done met work? What kind of met work have you done?
No, that's actually planned for this year. So we
Okay.
were going to start some last year, but we decided to postpone that until this year. We wanted to make sure we'd sort of drilled off, all three of our target areas before we started doing metallurgical sampling. So that's one of the things that we'll probably start in the next month or so. We'll do some preliminary testing just to get a sense of, we know there's a lot of visible gold in the system. We see it in the quartz veins, obviously. We see it in the surface where they're doing some artisanal mining down by the lake and that pitting area that Ted had mentioned earlier. There's a lot of visible gold in the system. But again, if you look at the alteration style, it's very similar to the mine next door. Again, we know that because, our exploration manager and our structural consultant both spent a considerable amount of time there, so they're very familiar with what the ore type looks like over there. And you can take some of our core and you could compare it, very directly with that system. So we're not expecting anything different or strange from that perspective. But at the same token, we need to do the work ourselves and make sure we know what we've got. So we'll start with that this year. We'll do sort of an early stage test, just to have a quick look at it, and then once we've got more core to work with, then we'll probably do a little bit more expansive metallurgical test towards the end of the year, in anticipation of a new technical report in early 26.
So from the perspective of lithology and structure, your land package also compares to the neighboring
Yeah, I
operating
mean
gold mine.
it's the exact same geological belt, the same volcanic belt. Again, the contact relationship between the sediments and the volcanics, which runs for about 6 kilometers on the eastern, sort of on our northeast trend on our property, that same relationship exists next door. And if you talk to Chris, our geologist, our exploration manager, he'll tell you that some of the best grades at the mine next door are within 500 meters of that contact where their structure emanates, the structure that our mining emanates from. So ours is, instead of ours being perpendicular like over there, ours is parallel, but it also gives us, we've kind of mapped a belt that's sort of 4 kilometers long up to almost a kilometer in width, where there's just a lot of shearing, a lot of alteration through that belt. And we are beginning to see some evidence of gold mineralization right on the contact of that fault, that sediment volcanic contact. And that's one thing that we'll be doing a lot more exploration on, and certainly this year and hopefully in years to come on the project.
Well, so knowing all of that and seeing what you've seen so far, how big could this thing get? I mean, is there an exploration target size that you're working with here?
Well, I think
That's the million-dollar question.
yeah, that's the big question. And I'm a fairly conservative geologist, so I don't like waving my arms too much, but let's just say we have three geochemical anomalies that are equal the size of the mine next door. So the open pit mine, you could stick that mine pit on three of those geochemical targets. On our probably our key zone, the Jagger zone, we've now drilled that over about 650, 700 meters strike length, and we're getting, good mineralization up and down the drill holes on that. We've drilled it to about 170 meters below the surface, which means we've still got a bit more room to go to depth before you likely exceed a reasonable pit limit. But overall, like, we're looking at, 3 kilometers of strike length of this structure that we are exploring. And so, trying to find hot spots along that zone is really what we're focused on right now. But yeah, it's got, again, pushing me. I'd say we have million-ounce potential. And we're obviously, going to do the work that we need to do to show as many ounces as we possibly can over the next year. And you know, you ask me in January, February of next year when we have the mineral resource estimate out. I'll be able to give you a much more, much more comprehensive answer on that. But
And
yeah, we feel good about our prospects on the property.
yeah, and we're only playing on 15% or
Yeah.
17% of the license on the northern corner. We have yet to explore the rest. We did a mag survey way back in 2020, got that interpreted, and then reinterpreted more recently. And geophysicists has identified additional targets for us to explore. But we were so busy with the drilling program that the break that we've taken from the end of the just past drilling program that ended the first week of February, we started to do more grassroots work on the rest of progressing of the license towards the south and the west. So there's probably more potential as we go forward. But like Paul mentioned, that the focused area, that 3 to 4 kilometers in length by almost 1 kilometer wide, has a potential of, 1 million ounces or more. But we still have yet to discover more on the package.
Hmm. What's with the now that you're talking about this, Edward, you're reminding me is that when I look at the maps, there seems to be like kind of like a hole in the middle of your, or like
Yeah,
you're permitted around
that's right.
something. I looked at the pictures, it seems like it's green, some kind of a forest. What's that?
It is a classified forest, but it's I would say, a hangover of the colonial days of the 1920s when the French colonized the area. They put the classified forest all over the place. This is not a pristine forest or plantations. There are small villages in there. There are illegal loggers, illegal miners in there. So there is a path forward to have that declassified. And that is something we intend to sit down with the government and talk about this year. Uh, because if you're able to show the potential of mineralization continues in that zone, et cetera, normally the government will grant you access to that area on the condition that you agree to reforest another area of similar size. So that's the trade-off. And that's what we intend to do because a lot of the work that we've done a lot of work close to the boundary of the license, and we've seen a bit of illegal activity on the other side, on the classified forest side. So we think that there's room for expansion, and mineralizations seems to have legs.
So how
Yeah,
much
the
of
the
the
Meg survey we did, sorry, the Meg survey we did, there's a lot of structural intersections down there
Right.
that have been identified, and so those are things that we want to go have a look at.
Hmm.
But again, we need to be able to secure, again, on the part you're talking about, we can't obviously do much on that at the moment, but there's other areas around that there's still a lot of structural intersections. And we do have some old data from the BRGM days that would suggest there are some anomalies along the very western edge of our permit as well. That again, we've done a couple of quick prospecting traverses through there, but we really haven't done any focus work in those areas as well. So we're keen to we're keen to get more boots on the ground and look at those areas as well.
And but as far as I understand it here, Paul, you say that mineralization happens along a volcanic sedimentary contact. Is this because I'm not a geologist here, so it's normal that I'm getting kind of lost here. But is this a lithological control or a structural one? And how do you distinguish between the two in the geophysics that you're talking about here?
Well, again, we know along the eastern side where the big fault is. We've identified that. We've actually seen it in drilling now. And again, with Dr. Ghislain Tournier's experience, he was able to help us do that. You can see it pretty clearly in the geophysics when you have the raw geophysical data processed. You can clearly see that contact. Within the rest of the volcanic package west of that, we know it's a fairly thick succession of pillowed and massive basalts, but we also know towards that western margin, you start to see different rock types in there. So you see some tufaceous material, you see some sort of interflow sediments, and generally that's what you want. Like again, for gold mineralization, structure is the key thing. You need to have structure to plumb deep into the Earth's crust to get those fluids flowing. But you're really looking at areas of what we call rheological differences. So where you have a very, very strong rock versus a soft rock, the softer rock will deform sort of elastically. The tougher rock will likely deform more brittly. So that creates spaces, fluid flow spaces, that kind of thing. But it's nice to have different rock types because it's also a chemical system too, right? Like if
Mhm.
you have if you go across a chemical break or a chemical contrast, that will sometimes cause gold to precipitate out of solution. So you're kind of looking at for both of those things, and ideally you've got structure with different rock types, and that's kind of what we're looking at. So we know we've got those different rock types within the heart of the property. But again, we've just had so much luck with our prospecting, mapping, soil geochemistry, and drilling on that northern corner that we've just, as a junior, you've only got so many dollars. We've tried to focus that money to the spot we think has the best return for us in the immediate future. But we will do more work on the rest of the property and see what else we do have down there.
What is the host rock composition in specifically the highest grade intervals here? That like what's acting as traps for the higher grades?
Well, again, it's structurally controlled for the most part. So we have, it's basically volcanic. So basalts, phaleolithic basalts is what we're looking at. We are seeing other intrusive types, so like quartz feldspar porphyries, for example, which are very commonly found in these types of deposits as well. Dioritic dikes, again, these things can provide contrast, to help fracture things up. But the dominant thing are these shear zones. So we've got these very strong penetrative north-south shear zones. And within those shear zones, you can get from nothing to a couple of grams per ton. But where the system really gets hotter is when you get these cross-cutting quartz veins. These are sort of quartz carbonate tourmaline veins. Again, exactly the same thing that you see next door and in a lot of other orogenic style deposits in West Africa. And those are what's bringing in, we believe, the higher grade, the more VG that we're seeing in the core as we do our diamond drilling. So you kind of want both. You need that ground structurally prepared, but then that cross-cutting vein system is also very important to our deposit model as we're building it today.
These sheared volcanics that you're talking about here, are they heavily deformed? Is there a lot of deformation across the package?
Yeah, there is quite a bit, and that again, that's that band that we've kind of defined. If you walk through the volcanic package, again, you'll go from these very massive. I don't know if you know what a pillow basalt is. A pillow basalt is formed in an ocean environment. So think Hawaii as the lava flows down and hits the ocean, it'll create what they call a pillow basalt. And we can see those very, very clearly on the property. So you'll go from that where you can see the original textures in the rock very, very clearly. And then you'll very quickly move into these extremely sheared zones where it's really hard to really understand what the rock type was to begin with. In fact, when we first started out, we thought maybe we had, sedimentary packages in there as well, but we've now done enough sort of thin section work and other exploration work that we understand now that that's just basically a very heavily, very strongly sheared volcanic. So generally, the greater deformation you have, the better chance you have for fluid flow. So we see that particularly in the Jagger zone, we have intense deformation in there. In fact, we've had a couple of outside geologists from other companies that have come to review our property, and we took them to sort of the main Jagger shear zone where we exposed it. And they both sort of stopped and went, "Wow, this is an incredible outcrop." So I know it's very geology geeky things, but they were obviously incredibly impressed with the shear zone that they were seeing on the property. So, that's the kind of thing that we're seeing on this particular target. And so, we've got the right geology, we've got the right structure, we've got the right fluid flow. It's just a matter, I think, of drilling this thing off and trying to put it all together into a mineral resource estimation.
And I
And
suppose,
that shear zone has width, right, Paul? I mean,
Yeah, the Jaeger shear itself, I mean, where we map it on surface is anywhere from 50 to 100 meters in width. And, some of our early trenching, we got like 99 meters at 1.4 grams in our early surface trenching. So again, that demonstrates we've got size, but we've also got, we also can get multi-ounce results from when you more specifically sample those quartz veins.
Mhm.
So again, it's going to be sort of a combination of both, and we're not at that point yet where we've actually done the modeling on it yet. But that's what this thing looks like. So you're going to have, I think, broad widths of what I would call moderate grade, but you're going to have these hot spots in there where you get the emplacement of these cross-cutting quartz veins, in such a manner that it's going to really really give a boost to the grade overall. And remember, next door they're mining about a mine and a half, 1.1 to 1.6 grams per ton, I believe, at present.
okay.
So most of the drill intercepts that we've found on the property are certainly, comparable to what they see next door.
Same depth.
Well, yeah, yeah. So the big difference between us and next door is that the structure they're mining is what would be called a thrust. So it's a more of a low angle. It's dipping about 40 to just say 40 to 45 degrees to the east. With us, all of our structures are more vertically dipping, so they're much steeper. They dip sort of 70 to 80 degrees to the west, which is good because we are getting what I would consider to be underground grades on some of our drill holes, which means these things typically have roots that will go down a long, 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 long way. And so we haven't even attempted to explore that aspect of the mineralization yet, but we will likely put a couple of deep holes into it this year just to see, because these shear zones, just by nature, they're going to go a long way down into the earth. And so that whole system, we might not even be in the best part of the system for all we know, right?
yeah,
Like, it's always the geologist's dream is to have the best mineralization, under surface. But, we will test it in a couple of spots, we believe. We're just sort of developing a drill program now, but it does likely have the potential for an underground target beyond any open pit life of mine that we can create on the property.
Well, I also wanted to ask you about geometry, but I suppose it'd be better if we are talking after this drill program about geometry.
Well, I think we understand the basic geometry of it. I think what we need to do is tighten up our drill. I mean, we haven't even explored like even the Jagger zone, the core where we've done a lot of drilling. We extended that in our last drill program. We extended that zone about 200 meters to the south, another 100 meters plus to the north. And then honestly, there's a gap between that most northerly drill section on the Jagger zone to the south end of the road cut zone that's about 400 or 500 meters that we now believe is likely connected structurally. So like we're still in the exploration phase in some respects, but we do know that we need to get a resource out to the market. And so a big part of the program will be, doing a bit more of what I would consider to be definition drilling, to try to make sure we understand the model 100% or as best we can, and make sure that we are able to build that model accurately with with good representation of what's actually happening with the gold mineralization.
I do want to talk about why you're going for a resource in the first place. So we'll get to that part here in a second. But I also see that, and you're kind of touching upon it here, Paul, briefly, but across the different zones, there is quite the wide ranges for the grades. There's some great variability that you're dealing with here. Like there's in one occasion you have like 210 grams at Caddy, but then there's 3 grams at Jaker and 1.7 grams at Road Cut. And within the zones too, with this phased drill program, take Caddy, for example, there's 2 meters at 16 grams, and then there's 60 meters at 3.3 grams. So
Yeah.
do you expect this great variability to prove a challenge for forming that resource?
Yeah, I mean, it's going to be something we have to look at very, very carefully. And again, to help ourselves understand that, the diamond, so a lot of projects, particularly in West Africa, you'd be doing RC drilling, which is a little bit, our drill cost for our diamond drill is actually very, very good, but it's generally cheaper. It's also quicker, but you don't get structural data. So one of the things that we made a decision on early after our first drill program is that we realized that we need to have structural information. And the only way to do that is when you do your diamond drilling, where you're actually bringing a piece of core to the ground, we're able to orient that in real space. And once we're able to orient that core in real space, now we can actually measure the attitude of the quartz veins, the different fractures, faults, shears that we're dealing with. So we've built and we're continuing to build a massive database of structural information, which when we get around to doing the modeling, is going to be really, really helpful for us in terms of understanding, what's carrying the high grade, what's carrying the low grade. But it's going to be a combination of both things, Antonio. It's going to be, there are going to be broad zones where we have lower grades because we see that in the trenching, we see it in the drilling. So some of those lower grades you were talking about are probably typically over, maybe 20 meters, which, is a very acceptable 20 meters of 1.5 grams is quite an acceptable target from a open pit perspective.
Hmm.
And then when you see those higher grades, so yes, we did have, that one hit at Katie Zone that you referred to, which is probably our best hole. For instance, that was I think it was 9 meters at 24 grams per ton, call it. And within that, there was a 1 meter section that was 210 grams per ton. Well, we clearly hit one of those high grade veins, and that clearly had a lot of gold in it. But if I strip out that 100 or that 210 gram assay, and I look at that same interval, we were still getting 2 or 3 grams over that same interval. So when we come to doing a resource calculation, we're going to have to evaluate all that. We will be capping. I mean, I don't know what the number is yet because we have to do the statistics on it, but we will be capping those high grade values so that we're not over projecting gold into areas that we shouldn't be doing it.
Hmm.
So it will be complex, and we're going to make sure we have to make sure we get the right, we'll bring in an outside consulting firm to help us do that. And that's one of the big things that I'm looking at right now is, which consulting firm has the experience to do this because not all are equal. You definitely need to find somebody that's got the right experience, that's done these kinds of things before to
Sure.
make sure that you're dealing with that that
Hmm.
that factor, very, very well, actually.
What is the within the topic of grade variability and all that? What's there's mention of visible gold. What's the frequency of VG and how is that being screened, if you will?
Um, I'd say we're probably getting it in, I don't know, 1 in 5 holes we see visible gold, something like that. And we can see it at multiple hits in a single hole. It can be in different zones within a given hole. So it's kind of like it's kind of all over the map, honestly, with typically with visible gold. And it's just, if you drilled here and you were 30 centimeters away on another hole, you might have missed it kind of thing. So it's very hit and miss. Um, but in terms of how we handle the core, I think that's an important topic that you've kind of brought up, is that we have a very strict regimen in how we do things. So we orient the core, we set it up in the core trays, we mark, the orientation line on it. And then we do our structural work from that orientation line. And then our sampling work is also driven from that same orientation line. And we always take the same side of the core for sampling. We split the core, we cut the core in half because we want to have a record so we can go back and look at things. And if we want to do re-assaying as well, we want to keep that second half in the core box so we can go back and do other additional work on it. But we always take the same half of the core from the hole for assaying. So, we know that there are zones that the visible gold that we saw in a quartz vein did not actually get into the assay result because it's still sitting in the core box.
Yeah.
You know, in my experience, and I've looked at hundreds of projects around the world, that doesn't happen sometimes. Like you do see some operators that will, conveniently twist the core and put the gold grade into the sample bag to make sure they're getting a good number. We're not biasing ourselves that way. We're being very, very careful with how we do things. And I'll credit Chris, our exploration manager. He's really in control of that. But we're very careful how we do this because again, we recognize the issue of high grade gold on these things, and we don't want to be biasing, our numbers higher, and then you do the work and you find out it's not there. It's a disaster. And I
Yeah.
think there's a fairly recent example of that, which I won't mention, the
Yeah.
Canadian markets that's having that kind of problem at the moment. I'm not saying anything wrong. I want to be clear about that, but they've got a high grade gold issue that it seems to have caused them a lot of problems with their resource modeling and how they're doing things. So again, we're just making sure we're doing it the right way. And that's one thing I will say when I met Ted initially, even though we were private and we really didn't know what we had, I said, Ted, from the outset, because of my background, I want to operate this thing to, at least or better than NI 43-101 standard, right? I want to make sure that we're always doing our geochemistry right, our mapping right, our trenching correctly. So we've made sure that even during our private phase of the company, we were making sure we were hitting those best practice standards for mineral
Yeah.
exploration.
And that applied to every phase of the company in the private years. Even we were audited. We had audited financial statements from the very beginning, from 2016 on. So we spent the money to be above board.
Hmm. And I hope, Paul, for your modeling, it's going to take less than 700,000 meters of drilling. Um,
Yeah,
but
that's a big number, but yeah. I mean,
how
we've got
much?
big zones. I mean, it's a good question because we do, like, if we're successful connecting the Jagger and the road cut zone and then the Katy zone that you talked about earlier, that kind of sits off to the west a little bit. I mean, we theoretically have over 3 or 4 kilometers of strike length of shear zones. And to get to a mineral resource estimate, if you just use a fairly conservative, 50 meter, spacing on holes, it's a lot of drilling.
Hmm.
And so again, I think you kind of raised the question, why do the resource estimate now? I think we've got enough information, certainly on Jagger, and I think we're building that on the road cut zone that we probably have enough density to start bringing those numbers to market. The Katy zone has only got about, I think, 12 drill holes on it to date over basically a kilometer of strike length. Like it's not one, it's sort of a parallel system there. We don't have enough there, but again, that's one thing we'll want to do more drilling on, likely this program, is see if we can bring that up to speed as well. So yeah, they're big targets. It's going to require a lot of drilling. But we think we'll, with the 20 to 30 thousand dollar program, and again, we're in the process of laying that out as we speak, but we think we'll have enough drilling to have sorted out, the key areas of those targets, from a mineral resource estimation perspective.
How much of the 20 to 30,000 meters that you're planning is going to be RC versus diamond?
Oh, it'll be heavily diamond. The RC drilling that we would do is primarily along that contact zone. If you look at that contact between the volcanics and the sediments that sort of borders the key area of our work, we'll probably go in there with an RC rig. Just we can get more holes into it and just see whether that is what I would call, quote unquote, a pregnant contact.
Hmm.
We do have evidence, so we did drill a couple holes into it. Our best hole to date, up in the road cut zone, we drilled 2 meters or sorry, 6 meters of about 2 grams per ton right on that contact. So we do know there's gold there. We also know, looking at the artisanal mining activity that's going on along the lakeshore, where that contact would project to surface geophysically. We do see guys out there digging a meter or two down, panning the material and coming up with a very, very fine, again, it looks like an in situ style gold gold in those gold pans. So we're confident that it is mineralized. The question is where and over what extent, can we build that target? And that just lends itself. It's on the flats. It's a bit thicker saprolitic cover down there. So it just lends itself more to an RC program until we can nail down some areas that we think look prospective. Then we'll probably bring a diamond drill back down there and do the same work we're doing on top of the hill.
And that's not seasonally related. I mean, it doesn't get too muddy or anything like that in our
Oh,
summer.
we haven't
No,
been.
yeah, there's a couple of rainy seasons, but we really haven't lost any time to that, both during our prospecting, trenching, geochemistry, and even the drilling program. It's a little tougher on the flats because the water doesn't drain quite as much, but certainly where our key drill targets are, we've drilled year round, and we've really lost no time to weather.
Hmm. You're Edward, maybe you can talk to me more about what Paul was touching upon there for a second here, but going for an MRE at this stage from the market perspective. I mean, do you feel like the market is rewarding MREs right now? Because and again, there's plenty of land. There's the geological fingerprint that you can go and test for more discoveries and more, feeding more drill holes into the market instead of kind of putting a cap on it. So talk to me about it from the perspective of the stock market.
Well, I don't say necessarily that we're going to be fully rewarded for it. I mean, if you look at the stock price with all the results that we've been putting out, you know, the price of gold, I mean, the stock price has not followed in tandem. So, but the idea here is for us to get a good estimate of where we stand after drilling almost 2 years on the project, and also, where we want to go with this project, and if we're successful in bringing it to near 1 million ounces or so, does it have legs for us to continue and bring it to near 1.5 to 2 million ounces? So from one to two, it changes the ball game totally for the
Sure.
company. Uh, Anywhere between 500,000 to 1.25 million, you're obviously a target for the neighbor next door.
Mm-hmm.
If you look at their production rate and when it's going to start to decline by 29, 30, they're going to need ore. They're going to go from 275 to 110,000 ounces. They're going to need some stuff to supplement that. And Yare represents, at the current time, 60% of their free cash flow. So I would assume that you would want to continue that as an operator next door. So our goal in terms of the first MRE is to really be able to understand where we stand in terms of the future of that project. So if we're going to throw more money at it, because we do have that 1 million ounce or so, yeah, definitely, let's do that. Let's build it as big as we can, because we're not necessarily in a hurry to unload it. We're here to build the asset to the benefit of our shareholders. So our success will be their success.
Well, you say you're here to build the asset to the benefit of your shareholders. What if it's not there? What if the 1 million ounces that you're hoping for is not there in the way you're hoping for it to be? Would you know enough to walk away? I mean, and kind of be like, okay, this project is done for. We go to do the next one. I mean, it's what I'm asking here essentially is this next drill program going to be drill to kill?
No, not necessarily, because like I said, we're only playing on 15% of the license. There's still a lot to do. But if we do come up with 800,000 ounces, I mean, 800,000 ounces, 9 kilometers away from an existing mill, is not a loser.
Hmm.
It's a winner because you can easily truck your ore. Now, if you look at Perseus, their track record, they had the Sissingué mine up north, and in 2020, I believe, or 2021, They bought a company called Kobo Resources, which was 70 kilometers away from the mill, Sissingue, and they paid $113 an ounce in the ground, 70 kilometers away for 500,000 inferred resource.
Yeah.
So success for Kobo is not necessarily 1,000,000 ounces. When we started out, Paul and I, we were looking at this thing and our initial discoveries, we were saying to ourselves, 500,000 ounces, 600,000 ounces is a success for us. But as we kept going and making discoveries, now we're inching towards the 7 digits, and we think that it has potential. So even if it has potential for underground, I mean, this is a different ballgame. So like I said, the first MRE is gonna help us identify our path forward in the very near future, and we think that we're going to be there in terms of ounces. So,
do you have
I
enough?
think it's just prudent that we, as a company, we know what we're dealing with.
yeah,
Because your term drill to kill, I wouldn't classify it as that, but it's certainly drill to understand what you have, and if what we have is not good enough, then it would be foolish of us to continue wasting, shareholder money drilling this thing. So I think it's just the prudent thing to do is to understand it. And, do we have to go public with it? If we knew internally, we sort of get into that whole situation. Well, as a junior, if we don't think it's there, we don't put it in MRI, I mean, or MRE, what do people think, right? So you get into that disclosure issue too, right? We need to tell the market what's going on. And I think the best way to do that is through mineral resource estimation.
and we've been transparent from the get-go with this company being audited and so on. So, and we behaved like we were public from the get-go. So we're just going to keep on doing what we've been doing.
Well, I do hope you can do it without an MRI or without any of us needing an MRI in the process. But do you, and I think, Paul, drill to kill is just way more catchy than drill to understand, although I assume most of it is really drill to understand, or should be.
Of course.
Yes.
Yes.
Do you have enough money to do all that drilling, 20 to 30,000 meters? You said it's mostly diamond. How much is that going to cost you? And do you have enough money to, keep the lights on, but also keep drilling?
Well, the Kossou project for let's say 20 to 30,000 meters, we've estimated roughly right now around $7 million. We'll know next week when we're both going over. We're going to be sitting down with our geologists and wrapping up our technical assessment of what we're going to be doing for the year to come. So obviously with 2.7 million in the bank, we're going to go back to market, but we have enough money to kickstart the project early mid-April to get the drills back turning and continue the grassroots on the other projects. So yes, definitely we'll be back to the market. That's the story of juniors anyways. I mean, you always need money because as you go forward, you're developing and obviously creating value. And we're very tight with our money, so we're careful on how we do it. And like Paul mentioned, we have a very low exploration costs in terms of drilling at $203 Canadian, which includes obviously the drill, but includes the excavators and the bulldozers, the fuel, the core boxes, and even the assay costs. So, we were in Zurich where we met you, and we heard guys paying 800 USD per meter. So that's 6 times what we're paying. So we're quite fortunate.
And we're looking at the potential of our own rig as well, because we think we can have that cost again, and that's another advantage through our partner at Luso, right? We do have the potential to be able to bring a rig in that we don't have to quote unquote pay for, and just basically put manpower on it effectively. So we're exploring all those options, to see if we can keep our exploration cost as low as we possibly can.
Yep.
Do you need special permits to bring in your own rig?
No. You do need, obviously,
well, I guess
go
to get
through,
into the country.
you go through the country and obviously customs, but you do have custom duty exonerations under the mining code, so that's not a problem there.
Yeah. What do
And our
you
partner has, they've already got operations within the country, so it's
Yeah.
possible we could get a rig from in country as well. So we don't have to worry about any of that customs complications.
why I ask it? I was thinking maybe even more social permitting than government permitting, because if you use your own rig, that's money that's not going into local businesses essentially if you would use a local contractor.
Well,
Well, yeah,
you would
go
obviously
ahead.
use the local manpower to run your rig, but it's just the cost of the equipment that we're reducing, you know. So, and you're still using the lab and the other stuff and the fuel locally and the suppliers and the service providers. So it's basically, reducing your costs on the equipment per se.
Right.
And we do from a social issue. So the name Kobo is actually derived from the two cities that basically border the project. So there's the town of Kossou, which the name of the key project, and the town of Bokobo, so Kobo. But like through our whole exploration campaign, we've had up to 50 guys working for us, or guys and gals, and we try to draw equally from both cities as much as we can. So we've done an awful lot there. I'll let Ted talk about some of the other social issues that we're working with them on. But you know, our whole staff, apart from Ted, our exploration manager Chris, and I, it's all local talent. We just hired a new geologist who spent 15 years working at mine sites in Côte d'Ivoire. We've just brought him on to help sort of as a senior geologist role. So we do hire locally. We do make sure we're pumping as much money back in the local economy as we possibly can.
So everyone's happy. That's essentially what you're telling me. I mean, the locals are not revolting or anything like that.
No, no,
No,
not
we've
at
had
all.
no
We just
social issues.
organized the first Kobo Soccer Cup last fall. Uh, Supplied jerseys and uniforms and whatnot, and we're about to start preparing for the second year, where now we're going to have three towns playing for the cup. So we're looking forward to it, and it was done in conjunction with the sous-préfet, the local chiefs, and the nobles of each town. So it was a great event, and whenever we have the opportunity to contribute, we do so. Even though in the exploration phase we have no such obligation legally. So yeah, when we can help, we help.
What does the winner get? I mean, do I want to go and compete in that soccer game? Do I get a
No,
1% royalty if I win?
no,
W-
no.
Um, yeah. So what does the winner get? I mean, I'm
Oh,
excited.
the winner,
I'm
obviously,
invested.
we've given them a small token. Obviously, they have the jerseys to keep and whatnot. And this
Nice.
year, we're looking at probably bringing in some coaches
Oh, cool.
uh, from the outside. So we're beefing up, the implication on that level, and so they love it. I mean, they see the benefit, and it creates a sense of community and a sense of respect.
Hmm. I was about to love it too, but then you called it soccer instead of football, and now I'm kind of pissed off. But we'll talk about that off mic. What the I do
I
want to talk
guess
about
because
the
we're hockey fans.
exactly. Well, to get back to you, I'm gonna start calling it ice hockey. Um,
Yes.
when we I want to talk about the when we talk about West Africa, I always look to talk about the artisanal miners because they're a fact of life there. I mean, it happens. Sometimes they uncover geology. I mean, as Paul
Yeah.
explained earlier on, but how have you dealt with essentially having to, well, remove them off your land?
It has happened in the past, I'd say way back in 21, where we did have an instance of seven or 800 illegal miners in an area. We did involve the government. The government has a repression squad, and they came in and seized the material and the equipment as well as whatever production they had put out. So the first time they give them warnings, etc. But the second time, I mean, there's criminal charges that are laid and so on. So we've been successful on that front, and we barely have, I would say, 35, 50 people at any given time right now on the license. And you're right. I mean, they are the first people sometimes that help you discover or make discoveries. And for example, last year we were drilling. Obviously, with the drills 24/7, we're making a lot of noise, so it allows them to be hidden in an area and, and dig away. But we did find an illegal area. We sampled that, and we got 28 meters at 4.4 grams per ton. So, sometimes they're quite helpful. And we sit down with these guys and say, look, instead of doing it illegally, if you want a job, why don't you come and work for us? And several times these guys have come across and work for us, so they have a steady revenue. So
Yeah.
that's the way we approach it.
That is an interesting way to deal with that. And that's how I like seeing it getting dealt with. And then I kind of have a little bit of a negative experience myself, which is why I'm asking. So I'm happy to see that's how you've dealt with it. I've done separate episodes on Côte d'Ivoire, but how is the specific region that you're in from the perspective of security? Because it's kind of in the middle of the country, but it is close to as I mentioned at the beginning, the political capital, not necessarily the de facto capital. But yeah, talk to me about security in that part of Côte d'Ivoire.
Well, we feel quite safe there. I mean, we've been going there for 10 years or so. We're 35 kilometers away from the Yamoussoukro, like you mentioned. The area is heavily policed on the roads, whether it be through the army or the gendarmerie. The sous-prefecture is right next door to, or is on our license. We have either weekly or monthly discussions with the sous-prefet. We often invite the local Ministry of Mines staff on our site, and we exchange. And when we have problems, we share. The other thing is we hire local guys as our security guys also. So they're our eyes and ears. And over the years, with the drilling, obviously, you're going to be impacting the farmer or the planter. You're going to be obviously destroying part of his plantation and so on. But there's a compensation mechanism in place that it is run by the Ministry of Agriculture. And us as a company, we have no say in that. So we've had 4 check signing events to date. And every time everyone has been very happy with the results and the money that they were compensated for. So in that area, that part of the country, we feel very fortunate and safe. But I must add that we've driven to the north, we've driven to the east, the south, and over the years, and oftentimes we've driven alone or just the two of us. Even Paul and I, in the first couple of years of Kobo, we were, scouting Kossou on our own in the mountain. I was handling the machete, Paul the hammer, and we were encountering locals in the fields or in the plantations. Never had an issue.
I know you have to run in about 7 or 8 minutes here. Let's talk a little bit about Kotobi. You have 2 earn-in agreements with Nisdave, if I'm saying that correctly, probably not. But what's going on there? What are the terms? What are you doing in Kotobi?
Kotobi is a grassroots project. We're in our first renewal phase. So we did a mag survey way back just about a year or two ago. And we had it interpreted, and the geophysicists identified some targets. But previously to that, we had done a small regional geochem program, 400-meter spacing. So right now we're focused on looking at those identified targets by the geophysicists and doing some sampling on a 200-meter line spacing. So we're going to be doing that for the next couple of months and advancing that project. Excuse me. And then the other licenses that we brought on board, which is Nesdave. It's a combination of the names of Nestor and David. That's how they named their company. So they're three local geologists who identified high potential areas on the eastern side of the country. And I cultivated over the years a relationship with a few of these guys, and we got to know each other, and a trust has been created whereby they were awarded those licenses, and we decided to team up with them. So that's where the earn-in agreements have come. We've been negotiating for almost a year with these guys, and so they're in a key area that we think that there has high potential. So we did those two deals, and we also created a subsidiary where we own 40%. And these same two geologists are also shareholders with us in there. So there are a couple of applications that are pending that have been also strategically positioned.
Why spend any money on it or on other stuff as a whole, though? I mean, if you already like what you're seeing in the different zones at Kossou, why not just keep spending money there?
Well, we do want to spend some money elsewhere because Kossou, where we're going to be spending the bulk of our money, if it is a takeout target, we want to have a fallback position for our shareholders to have two kicks at the can. That's the business model.
Okay. How much money are you spending at Kotobi?
Oh, it's very small. It's just a small team of geologists to technicians and a couple of local guys helping us do some grassroots work. So it's basically, 15, 20,000 a month max.
Okay.
Yeah, it's one of those things we'll have to just see how the results come back, and if we get good results, we'll amp it up. If we get, less than reasonable results in our minds, and we would just continue to mothball it effectively.
Yeah.
So what is that's all permitted, by the way? I mean, you can just go
Yep.
and do it. There's nothing, you don't need any
Yeah.
special. Okay.
Yeah.
No, you don't need permit. I mean, I kept saying to our local geologist when we were starting our drilling program, are you sure we don't need permits to drill? Because everywhere else in the world you need a permit to drill. And
Hmm.
he assured me we didn't, and I kept asking him, and the drill showed up, and off we went. So yeah, there's no permit. The thing you have to do though is you have to go talk, as Ted mentioned before, with the local chiefs and the nobles in the area. Let them know what you're doing, why you're doing it. They've got a lot of questions. So that's the biggest part. We do a lot of that sort of work leading up to those exploration programs to make sure we don't have problems when we're in the field.
Right. What would be the target geology there? Like, what are you really after there?
Well, it's the same. It's the same. What's called the Birimian Formation, which is the host rock in West Africa that hosts 99% of the gold deposit. So it's the same target rock unit, or formations. Again, structurally hosted. I mean, we're looking for shear related mineralization. So it's really not different. It's just that it's just grassroots. No one's made any discoveries on it. Again, we know there's artisanal mining happening. Again, we've got some geochem anomalies, as Ted mentioned, from the soil geochem that we did. We've got coincident geophysical anomalies that match those. So there's areas of interest. You just want to go have a quick look at them and make an evaluation. If they're good, we'll continue. If they're not, we'll move on to the next one.
One last thing before we wrap it up. What keeps you up at night? I mean, nothing's ever really perfect. So what are the main risks that you're working on? And yeah, what keeps you up at night?
I'll let you take that one, Ted.
I mean, what keeps me up at night is making sure that we're executing on time, and managing our financial resources adequately, not spending foolishly, keeping it tight, and making sure that we have the right people on board. And I think that we've been successful at that. We have guys that have been working with us for 6 years now. It's 5 years, 5 years. So we have a good team, and so that's what keeps us up, making sure that things keep flowing in a good manner, because you can get easily bogged down overseas.
It's indeed the SMI in Zurich that I saw you guys, that I met you, that led to this interview. Essentially, what else are you doing for marketing? Is it conferences? Are you doing anything digital marketing related? Or are you doing anything on social media? What's the marketing plan here?
Yeah, we're doing obviously the conferences like we met. We've got also a couple of other things brewing right now. We're doing some IR, and we're getting the story out there. So we're going to be a bit more aggressive as we go, because we just got back from we did Mines and Money in December. We did Indaba, we did PDAC, and now Zurich. So it's been on the road constantly. Uh, Now we're going to focus more at home, and get the marketing going in that way. So yeah, that's what we intend to do a bit more social media and stuff like that.
Mhm. I have only 30 seconds. Well, I have more time, but I know you have only 30 seconds here.
Yeah,
So
we
what
got
am
an
I
extra.
forgetting to ask you here at the end? What did you come here hoping to talk about that I failed to bring up?
No, I think we've covered pretty much all the bases. Obviously, um, an hour and a half is a good starting point. There's always follow-ups where we can go in more depth. And if ever there is a reaction from your audience, and you would like to bring your audience in for a Q&A, we'd be happy to do that.
Awesome. Well, Paul and Ed, thank you so much for you guys' time.
All
Thank
right.
you.
Thanks very
Appreciate
much,
it.
Antonio.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, Believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."